Joining us this morning is Prasad. He's the former head of the IMF's China division and also professor at Cornell University. And Professor, Geithner today or this morning is going to walk this really tough yet delicate line. Some say that he's running out of tools, or what are the tools really that he can use any longer to pressure China on the currency?
The reality is that the U.S. does not have that much leverage because the U.S. remains a very important export market for China. But on the other hand, any trade actions that the U.S. might take could end up coming back to bite us because ultimately we do want our exports growing as well. So the other reality is that with the very large budget deficit in the U.S., Chinese purchases of U.S. Treasury bonds certainly helps. It's not a massive amount, but if the Chinese did take any action to move away from U.S. bonds, that could potentially have a significant effect on U.S. interest rates.
Right.
So it's a very delicate balance.
It is a delicate balance. So then when we come back to the question of what Geithner can do, does he have to make a wide-ranging mixed bag of responses, or has he just run out of responses?
I think it's very clear that the U.S. administration's line has toughened a lot. In addition to the actions taken at the World Trade Organization, we've already seen Geithner's prepared testimony, which suggests that he's going to take a much tougher line on the Chinese currency, asking them to do a lot more, and also indicating very clearly that when the currency treasury report comes out in October, that there is going to be a very harsh message for China. So there is an attempt to use political levers as much as possible with the threat of significant trade actions. And I think right now it's a very credible threat given the climate on the Hill.
Right, given the climate on the Hill. In fact, the lawmakers, Professor, are saying that they may even allow companies themselves now to pursue sanctions against China.
Yeah, technically that is a little hard to do without the administration's backing, but the reality is right now you have a very combustible mix on the political side. Not only are we heading into midterm election season, but the U.S. jobs picture remains weak. The trade deficit for the first 7 months of the year is about $300 billion. Half of that is accounted for by China. So if you put all that together, it's really very easy to see why this is one issue, at least, on which there is a very clear amount of bipartisanship between the Republicans and the Democrats. Everybody can agree that China is a potential problem. It's probably a little overblown,
right,
but I think the Hill is really taking a strong line.
Okay, and so if those on the Hill, if those on the extreme side win out, what could be the risk then for, in terms of the response from China? What could we push them over the edge?
The real risk is that the Chinese also face a lot of political pressures on their own domestic front. So if there was a very large escalation from the U.S. side, you could very easily feel the Chinese getting boxed into a corner and feeling they have to respond in kind by retaliating. And this thing could fairly easily spin out of control. The reality is that on both sides, I think saner minds will eventually prevail, but there could be fairly significant cracks in this edifice of economic cooperation that the two sides have worked very hard to build, because ultimately these two sides have to work together, both on trade and other issues.
Right. All right. Well, overall, it just sounds like a very complicated problem, and it has been for quite some time, and certainly no easy answers there. Thank you so much, Prasad, for joining us.